Hello everyone, this is today's video analysis for June 20, 2019. Today we're going to take a look at the AUDUSD, the Australian versus the US dollar for today's trade analysis. Looking here at the daily time frame for quite a long time, if I zoom out even more, we could see that this currency pair has been in a significant downtrend, but we are seeing some evidence of at least some short-term reversal. Could be longer term, but at least some short-term reversal happening right now for the Australian dollar. Zooming it back in, we can see the black trend line. That's been a little bit of a downward push here for this currency pair as the dollar has risen. US dollar has risen. This currency pair has fallen to new lows down into the 0.683040, the orange shaded area down here at the bottom of the chart. Past couple of days, and of course after FOMC yesterday, we've seen the dollar falling off, the USD falling off, and this currency pair taking a nice turn higher. Well, it's an interesting scenario because the previous time we were down here at the blue zone, we turned back above this purple shaded area, 0.691505, sat down on top of it for a few days, and then continued to push all the way back to the 7,000 level. I think that's interesting for today because that's what we're seeing happen today, above 0.6915. We're getting above it. So it's easy to make an assumption at this point that with the momentum created after FOMC yesterday, that if we can get the market to sustain a hold above this purple shaded area like it did back here, it'll give us confidence to take a long and target at least back to the yellow zone, if not again back to the pink zone. And over time, if we were to see a break of the pink zone in that last resistance high, we could even see further reversal for the Australian dollar. If I take a longer trend line and put it out here like this, you could tell that if it got through there, we might even see further reversal here for the Australian dollar. But so that's what I mean by maybe our first signs of potential short-term or mid-term reversal is that we see it getting above the shortest trend line, making potentially new higher highs and higher lows, somewhat like it did back here, and we could even see longer if it gets above there. So probably our first clues and evidence of that will be the hold and sustain above 69.15, somewhat like what happened back here. In fact, we traded it back here at 69.1520 a couple of weeks ago and had profit back to the 7,000 level. So what does that mean, a breakout? Of course, we'll be looking for clues that it's going to stay above there. We take it down to the 4-hour time frame. Our first clue, and I think the next clue that I'll be looking for, is something very, again, similar to what you see back here, where it gets above, sits down on top of that purple zone as support before going up. So the worst case scenario is that we assume for the moment it's going to get back above here, and the next thing you know, sellers come back in and drive it back underneath. So we know that right now the risk is it gets back underneath this purple zone. So if we decide to go long and look for further reversal back higher, our worst case scenario right now is that it gets back underneath that purple zone. So what the best way to get our lowest risk, highest reward, is that we look for it to dip back down. Hey, take a look back here, similar situation, dip back down, decreasing our stop loss, making our stop loss smaller, and increases the potential of profit if it makes the turn higher like it did back here. Remember, that's all we do as technical traders. We look at historical actions, whether you're looking at simple price action candlesticks, whether you're looking at support or resistance, whether you're looking at Fibonacci or pivot points or stochastic or MACD or any other indicator. You look at the history, you say, this is what the market did last time, and we're going to expect it to do that again into the future. So the last time it got above the purple zone, it sat on top of it and went higher to the yellow and the pink zone. So we have this expectation that it would do a similar thing into the future. It's not a guarantee, so that's why we use stop losses to limit the impact in case the market changes its mind. So as long as it's above the purple zone, my focus will start to be buying, targeting the yellow and the pink shaded area for the Australian dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.